Welcome back to another video. Today we're going to be going over oil tanker stocks. I just want to bring your attention to this chart first. And to me, this is kind of concerning. We can see inflation is at its highest level for over the past year. It's at close to 5%. Politicians say we have nothing to worry about in terms of inflation, but I think it is time to take inflation a little bit seriously, okay? And interest rates could be rising soon. We see gas prices rising. And I think it could be a good time to get into oil tanker stocks before they absolutely blow up. So welcome back to another video. My name's Adam, and just before we get into it, please definitely destroy the like button as well as subscribe if you haven't already. So here we can see the stock price of NAT over the past, let's say 5 days. It's down by 3%. So NAT has not been doing incredibly well. However, if we're looking at the 6-month trend, it's up by 8%. However, I do expect NAT and other oil tanker stocks, for example, Frontline, over the past month, it's down by 1%. However, over the past 6 months, it's up by 29%. EURN over the past 6 months, it's up by 12%. I expect these stocks to continue to do well, and you can definitely take advantage of the recent short-term weakness in oil tanker stocks for long-term gains, okay? And we're going to go over some charts that definitely suggest that there is some upcoming price action and spot rates that will be very favorable to the oil tanker market. So right now, of course, we know that we're in a global shortage supply, and this definitely does not bode well for the economy in general and inflation in general. But I think this bodes well for, of course, shipping container stocks as well as oil tanker stocks among commodities. All right. And that's why I think that I'm still holding to my position when I bought NAT a year ago. As we can see right now, this is my second biggest loss at close to negative $800 US. Thankfully, I'm still up on my portfolio, but this definitely hurts, okay? But this is what happens when you take risks and when you don't do proper research. I should never have bought NAT at around a $5.70 cost basis, all right? But I do think that this will turn around in the near future. Okay, so of course, let's go over the spot rates first. I just want to point out a video that I think is really, really cool by BIMCO talking about, they made a video called What Makes the Ships Go, and now they're talking about protecting ship workers, okay? And this is just a few clips from the video here.
We've talked about ships and how they make the world go. But what about us, the seafarers, behind cargo? We are an industry that's proud from stern to bow, capped.
So yeah, I'll link this video down in the description below if you want to check it out. They always make really neat videos, and I thoroughly enjoy them, all right? So let's go right into the weekly tanker rates by Clarkson's Plateau Shipbroking. So shout out to them for providing these charts here. So right now, there is a weakness in the spot rates, and for some reason, I'm not totally sure why. We can see that the levels for Suezmax and VLCC are relatively depressed when we compare it to the 2021 year-to-date. So for VLCC, which carries 2 million barrels of crude, their 2021 year-to-date spot rate was 6,700, completely off from the 2020 year-to-date of 92,000, and spot rates is basically how much you have to pay per day for you to transport oil on their ships, okay? So it was 92,000 for VLCC carriers in 2020, but only 6,700 in 2021, and that's why we can see a tremendous decline in some of these oil tankers stock prices. Last week it was $3,200, and this week it was $3,600. So of course, like, the demand for these oil tanker shipping vessels seems to be relatively low. Okay, the only one that's doing kind of well is Aframax, which actually carries the least amount of crude at 7,500, above Suezmax, which carries 1 million, and VLCC, which carries 2 million. These carry only 500,000 barrels of oil, so you'd expect the spot rate to be much lower than Suezmax or VLCC. But I think that there's just an increased demand for shorter duration shipping routes. Okay, plus the combined factor of VLCCs unloading their floating storage, which we're going to look at below. Okay, so again, this is kind of concerning. I do think, of course, it is a short-term phenomenon, and spot rates fluctuate very widely. So this is not an accurate representation of what's going on long term, or what's even going to be going on next week. Okay, it could be like 10,000 next week for all you know. Okay, but again, it's not nice that the overall trend is downwards, as we can see here. Okay, so VLCC carriers went down the most, from like over 55,000 down now to, as we can see, like 4,000 for their spot rates. Okay, so that's, I mean, that is concerning, all right? And we can see Aframax actually pulling out on top so far. So Aframax is actually not doing too well for companies that focus on Aframax fleets. NAT, though, they focus on Suezmax vessels solely, okay? They have 20 or 24 Suezmax vessels. So again, like, this just shows you the dismal state of the oil tanker market. Again, like, I've been saying that it's going to pick up, I just don't know when. And right now, 4.9% of tanker fleet is currently used for floating storage. That means oil is still being offloaded. I remember there was a time where it was like about like 15-20% of tanker fleet was currently being used for floating storage. Of course, it is well below these levels. Even the VLCC carriers, of course, which carry the most amount of oil, are down by quite a bit. And even same thing with Suezmax and Aframax. So, I mean, it's just, again, as more oil is being offloaded, you can expect the tanker rates to be declining, because more tankers are now available, because they're not just being used for floating storage and to actually do transportation of oil. So again, this is, you know, I don't know how low it will go. It looks like before that, the levels in 2018 were around like 20 VLC, Suezmax and Aframax vessels, or VLCC carriers. And maybe it'll go back down to that, but it's still not at those pre-pandemic levels. Okay, tanker deliveries, I mean, nothing really to show here. It's kind of relatively in line with 2020 levels, but not as high as 2019, I would say. And we're already basically half the year in, and about in line with 2018 levels. New orders of tankers, relatively depressed, I would say, relative to 2019, 2018. And yeah, that's basically it for Clarkson's shipping. So again, I think this is why we've seen such weakness in NET and other oil tanker stocks so far, is just because their spot rates have not been picking up. And of course, when spot rates are low, this is when oil tankers just lose money. But again, we can see such an opposite trend in the crude oil price, which means investors are expecting demand to pick up, especially in the summer months when more traveling is going on. So over the past 6 months, oil has traded as low as like $47. We can see right now it's at close to its highest level over even the past year at $71.50. Okay, so it just keeps continuing to climb. OPEC is even increasing their production of oil, and as the price climbs higher and higher, countries in that in OPEC will probably want to cheat to earn more money and boost their production even more. Okay, so it marks an incentive when oil price is high for these OPEC countries, even though they have a limited amount of oil they can produce, to cheat and actually produce more oil, because they see that it's at $71 instead of $40 and be like, oh man, I want that money. And again, another thing is, like, look at the cases of Ronia, right? So again, this was corresponded to the wave in India plus waves in other countries, and this is continually going down, which is really good to see. Hopefully this is the last wave as the whole world becomes more vaccinated, and again, this will just encourage travel and ease restrictions everywhere. Okay, that combined with, of course, this inflation chart, positive news overall in the tanker market. So for example, product tanker demand expected to pick up in the summer. The product tanker market is expected to recover over the summer period, although not at a pre-pandemic rate. In its latest weekly report, Shipbroking Allied blah blah said we are now just a few weeks away from the start of the summer period, in which demand for clean petroleum products ramp up, and also as clean petroleum products ramp up, so does crude. Is traditionally nourished by increased travel, especially in the USA and Europe. Refineries anticipate that this year will not be identical to the summer of 2020, et cetera, et cetera. So again, I think it will recover. It's just a matter of time, but definitely before the summer ends, I do expect to see spot rates and NAT stock price and other oil tanker stock price to recover, hopefully to above $4. That would probably be my price prediction. And right now, of course, NAT is sitting at $3.40. So thank you for taking the time to check out this video. Again, make sure to smash the thumbs up button and subscribe if you haven't already, and I'll see you in the next one. Cheers.